Good morning, listeners, and welcome to the Trade Talk podcast. Friends, in the last week, the benchmark indices witnessed a sharp fall. From the weekly highest levels, the Nifty and Sensex corrected nearly 1100 points and 3700 points respectively. Weak global signals, geopolitical tensions, and rising oil prices were the main reasons behind the sharp sell-off. During the week, the Nifty tried to cross the level of 20-day simple moving average, which was around 17,300-200 levels, but it failed. And due to consistent profit booking at higher levels, we saw the market was closing below the levels of 16,800, which was crucial support level for the market. Below that, we saw vertical sell-off in the market, and market went to the levels of 16,200. It has also broken the level of 200-day simple moving average, which was around 16,830-820, and on a weekly basis, the market closed below the same, which is certainly not positive for the market. Now, on Friday, we saw a smart recovery after there was like some specific gains in the US markets. But if we go through with today's flows, or in the morning, if we go through with when I was like going through with the world markets, they were like dropping from their highs. US stock futures were down mainly on the back of harsh sanctions on Russia, and that's the reason we saw a sell-off in almost all world markets, and US futures were down more than 500 points. Even Singapore Nifty, which was gaining some 250-300 points on Friday night, now lost completely, and it is up nearly 30-40 points as compared to its previous close. FIs are consistently selling in the market. They sold more than 4,400 crores on Friday, but domestic institutions are offsetting to the sell-off, and they bought more than 4,300 crores. In fact, FIs covered their short positions in the FNO segment, and they are broadly positive on the market. But now we need to see that how this uncertain event gets unfold. For the week, again 16,500 would act as major support. Below that, 16,400 and 16,200 would be important areas of support for the market. In case the market breaks 16,200 levels, then the next level to watch out for would be 16,000 or maybe 15,850. On the higher side, as we mentioned, 16,800 or 16,900 in the best case scenario would act as major resistance for the market. And if we see the market is moving towards those levels, then there we should look for reducing weak long positions, or we may even take some contra bets of going short. Broadly, the market is completely depending upon the news flow. The markets are completely uncertain, and that's the reason for traders it is advisable to trade with strict stop losses on intraday basis. Also, for investors, our advice is to look for adding very strong companies at important support areas with a medium to long term view. Friends, that's all from my side for the day. With this, I'm ending today's morning podcast. Thank you and have a great day to all of you.